Hello and welcome to Car Dealer Live. I'm James Baggott, I'm the founder of Car Dealer magazine. And today on the show, I'm joined by two CEOs of publicly listed companies. Joining me is Daksh Gupta of Marshall Motor Group and Nathan Coe of Auto Trader. Good afternoon, gents. Nice to see you both.
Afternoon, James. Afternoon, Daksh.
Hey Nathan, how you doing?
Very well.
Thank you very much to both of you for joining us today. Now, this is a live show, and if you are watching and you've got some questions you want to ask either of our guests, please submit them on YouTube. They'll be fed through to me, and I'll make sure I try and get round to as many of them as I can. Now, we were chatting just before we came on air, and I don't know about you, but it seems like everybody that I'm speaking to at the moment feels a little bit down. The depression of the start of the year and the lockdown fatigue seems to be affecting many people. So we're going to try and keep this one as upbeat as possible. I mean, there are some questions in there that will probably lead to some more depressing answers, but we're going to try and keep the positivity going. Daksh, firstly, you're always a beacon of positivity whenever I chat to you, so probably the best person to turn to. I mean, please explain the shirt firstly.
Well, you said keep it a positive show, so I thought I would cheer Nathan up. So a little bit of a story. So last year when England killed Australia in the cricket, just for the avoidance of doubt, Nathan, we killed you, sorry. Nathan, I couldn't help but wind Nathan up a little bit about that. So we're having a bit of sports about the cricket. So for my 50th birthday, Nathan sent me a little present, which I've been waiting for the perfect opportunity to wear, which is an Australia cricket shirt, which he got for my 50th birthday. So Nathan,
you need to duck down so they can see the name, Daksh.
Okay, how's that?
Perfect.
Oh, perfect.
Look at that. Beautiful.
This will be the one and only time, Nathan, I'll wear this, and I'll look forward to wiping my windows or something else. So,
you've never looked better, Daksh.
There you go.
50 not out. We like it. So, Daksh, come on in. What reasons are there to remain cheerful at the moment?
Well, look, everyone recognises it's difficult right now, okay? And I think anybody who says otherwise is kind of kidding themselves, quite frankly. So, I think we've all experienced lockdown 3 is much tougher. It's a very different dynamic because, I think we're all being impacted in our businesses with the number of people who are either with COVID, sadly, or are having to isolate as a result of that. I mean, in our business, in the first 20 days alone, we had about 370 colleagues affected. So just around approaching 10% of our colleague base. We lost 1,769 working days as a result of that just in the first 20 days. So that's very difficult to manage because obviously it puts pressure on everybody else in the organisation. And I want to just take this opportunity to say a big thank you to all of my colleagues at Marshall because I think they did an amazing job under incredibly difficult circumstances. So that makes it difficult. And I think it would be ridiculous to sort of not suggest it's difficult right now. One of the things to be positive, we have 4 vaccines now. I mean, the latest vaccine announced last night, I think is positive. I was listening to the radio last night, and I think it was saying it's sort of 93% protective, and particularly with the UK strain as well, which I think is great news. I think 7.8 million vaccinations given so far. So, the government does seem to be really cracking on with that agenda, which I think is critical. I think, we are still able to trade, and certainly in terms of trading patterns, we are still selling cars and parts and hours. We are seeing consumers be more open to purchase either online or through the telephone with us. So it's amazing how we as an industry have been able to evolve our business models quite quickly, which I think is really positive. I think the other thing is, we are going to come towards the summer. And if you listen to the experts, then the virus should come down. And just look at the numbers in the last few days. It's good to see the numbers of new infections starting with a 2 rather than what we saw a few weeks ago with a 6. So there is lots to be positive about. We just need to focus on the end of the tunnel, which is definitely in sight as far as I'm concerned.
Nathan, you've got a unique insight into the marketplace at the moment. I mean, perhaps we could tell some dealers out there at the moment what sort of demand there is out there that you're seeing across your platforms.
Yeah, I mean, I'd say I agree with everything that that Daksh says there, and there is lots of reasons. We all feel a bit flatter about this lockdown, especially when we all got kicked with it the first, just at the end of the first working day of the month. I think it took the wind out of everyone's sails. But you're right, we do have a good view on the market. And I think that's probably the one point I'd add to those points that Dash made. And that's that, you know, it was only a matter of months ago that we saw some of the strongest trading conditions that some of us have ever seen in the industry in terms of margin and volumes. And I think those same forces that drove that unusual performance. There was a little bit of supply constraint, but there was very, very strong demand from people looking to avoid public transport or looking to get into car ownership or get further into car ownership. All those factors are still there. So actually, whilst we are locked down, we're being told to stay at home and stay in our local areas. As Dash said, that is impacting the numbers. We're seeing on average, based on proxy data, that it looks like retailers are selling around about 66% of what they were doing in the same, during January last year. So far, that's what we're seeing. So it's definitely down. It's definitely down a serious amount, but you would kind of expect that. If I'm honest, in April and May, it was more like 25%. November was more like 75%. So I would have, if I was a betting man, I would have said, I reckon this time might be more like 50%. It's come out much stronger than that. So I think a reason to be optimistic is that actually for us to be achieving those levels with the level of restrictions that we've got now is a sign that the market's quite strong. And like Dash said, there will come a time when restrictions are loosened. And I think when that does happen, we're likely, you can almost bet on us having quite a strong market once again, maybe not to the same level as what we all saw through June to October, but I think it's going to be stronger than you would ordinarily expect based on just the strength we're seeing with the level of restrictions that we've got at the moment.
That 66% number is already better than that we were discussing before. At the start of this lockdown, Catherine Fairs, your COO, spoke to us and predicted it was going to be around 50%. So very positive.
That was my prediction as well, actually.
Well,
we were totally wrong. Yeah.
So already seeing it better than that 66%. And Dash, I saw you nodding away there. I mean, perhaps you could give it from the retailer side. I mean, what are you seeing in your businesses, and what sort of level are you achieving?
So without giving too much away, because we're a listed company, and we're doing better than the 66 is what I would say. But I think there's a lot to do with brand mix. There's a lot to do with new and used. I mean, one of the things that's quite interesting, I was looking at your interview this week, James, and you'd specifically called out most people that you'd spoken to was between 40 and 60, is what you'd specifically said. And I think Mark Lavery himself said he was in that kind of zone. So we're doing better than the 66 that Nathan has quoted, which is pleasing. But there are certain brands where there are some nuances. So where you've got certain brands where maybe they've got a higher age demographic, you'll see that clearly they're impacted more. Where you've got brands which are, quite hot. So Land Rover is a great example. I mean, our Land Rover businesses are actually ahead of last year. So they're doing incredibly well. And there are some nuances between new and used as well. But overall, as a group, we're better than the 66%. So I'm pleased with that.
And I remember when we spoke before Christmas, after you'd given an update to the stock market, you said that used cars were struggling a little bit compared to new because people couldn't come in and test drive them and couldn't, kick the tires. Are you still finding that now, or have people got used to the fact that they can buy them online and are more happy to do so?
Well, you know what, that's been the most amazing thing that I think all of us have experienced. And I think there's a lot of sort of, noise out there around, well, is the retail model going to continue, etc. And, there's all these new entrants coming in, making lots of noise. But the amazing thing is, retailers are resilient. This industry is very resilient and we're adaptable. We're entrepreneurial. And I think one of the things that's incredible, in fact, I had a PLC board meeting on Tuesday and I made this very comment. If you'd asked me, would we be selling, as we have done so far this month, over 6,000 vehicles, okay, without a customer coming into our showrooms, I would have been saying you've been smoking high grade stuff, James, which is quite possible in your case. I think the other thing, so that's remarkable. And I think, we also have taken over 170 orders where customers have in the last month put their credit card details in and reserved online. And again, if you'd said that to me a year ago, I would have been saying the same thing. So we have adapted, we have evolved. I mean, we've been focusing very heavily now in terms of how do we better equip our sales teams around training, around better communication online in terms of how they communicate via email, the right questions to ask. And we've always done that, but we've just put a kind of real turbocharge in terms of focusing. Because again, I think one or two of our colleagues who are sending emails perhaps could just do with some development around, where to pick up the signs and what things to say. So we're really focusing on that. And I think, I actually feel very positive about our business and our business model in particular, because, as I'm sort of describing it, is a shift more towards online. But we also have to recognize what we're seeing right now is a consumer behavior that is forced to go down this route because they have no other alternative. I think the other dynamic that's quite interesting is when I look at those sort of 170 customers who have put deposits online to reserve vehicles, there is a much higher percentage of females who are doing that, which again, we know some of the data around diversity and do female customers feel comfortable about the process. So that's quite an interesting trend that we're seeing there. But also we are seeing a higher rate of cancellations there, which again, when you look at the reasons why they cancel, it's because they wanted to actually, physically see the cars, etc., but which of course they can't do at this minute in time other than a delivery. So, hence why we're doing things like, money day, money back guarantees, etc., which of course we're required to do under consumer rights anyway. So that's what we're seeing, James.
Do you think this is going to change the way that you do business going forward? I mean, do you ever see yourself going back to not offering that online service, or do you think this has changed the way that car buyers are going to interact with dealers forever?
No, the reality is we were all evolving that way anyway. So this was nothing new. All it's done is, there's, I don't know who quoted this line, but there's a great line. There's a sort of quote that's going around that sort of says, in 6 or 7 months, we've evolved forward 6 or 7 years. And that's a really good way of looking at it. So we were always naturally evolving there, but we've kind of had to turbocharge them through necessity. But I think actually there will still be those customers who still want to come and have that verification drive. There'll still be those customers who want to test drive their vehicle. So for me, this never more truer has the sort of strategy around omni-channel being true, or clicks and bricks, So, we are aware that elsewhere people have tried to go online only. And then of course they've subsequently had to go and buy infrastructure. So it's not as straightforward. I actually see this is taking our business more from a more traditional sort of showroom environment to one over here, which is completely online, because I think the reality is you have to have both. I think whereas we've been slowly evolving as an industry, certain groups faster than others, I think what it's done is it's pushed us all over here. And of course, these guys over here have had to kind of move over here as well. So it's just an acceleration of a trend that was happening anyway.
And it's interesting, James, when we look at the performance that we spoke about before on Auto Trader, I think sometimes it can be deceptive. Generally, sometimes Auto Trader stats, you can misread them, because I think the average is around that kind of 2/3 that we saw. But no doubt you'll have some retailers, or there are retailers out there that are doing nowhere near that level of volume. And we have seen a massive split between those like Dash that have kind of said, well, look, this is just the way it's got to happen, especially whilst we're locked down and restricted. We've just got to embrace this and go for it. And those that have kind of said, well, I'll wait it out, or I'm not going to, I don't want to invest all that money in a COVID secure environment. I do think we're seeing a split in results where it's not like everyone's doing around 2/3. And I think, as Dash said, that's really exaggerated at the moment, because if you don't sell like that, you can't really sell. But I think when we come to the other side of it, I think you'll find, as you're suggesting, a lot from a consumer's perspective, a lot of them aren't going to go back, and they're going to want those buying options. I agree with Dash. A lot of them are still going to want to visit the forecourt. But if as a retailer, you don't provide those services, at the moment, you can't sell cars. Well, in the future, it might still be a lot harder to sell cars unless you're willing to provide those options, but not for the reason of restrictions and lockdowns. It's just different people want to buy cars in different ways.
And you obviously deal with all of market, and Dash is dealing with that franchise world. So I mean, I'm interested to know what the smaller dealers are doing that use your platform. Have they managed to embrace online in the same way as the big dealer groups who've got the much deeper pockets?
Well, I think in terms of the big dealer groups do have much deeper pockets, but they've also got a much bigger job to do as well. More sites, more staff. So I think that one evens it out. Our smaller retailers tend to have a lot less staff and smaller locations on average. If you look at the numbers, actually on average, our independent retailers are doing slightly better than that 66%. So the numbers suggest to me that they're not being left behind, and it seems that many of them are embracing COVID secure delivery, click and collect, and home delivery. I think when you look at it anecdotally, though, the truth is there's some at one extreme that have shut it up shop and said, I'm just going to wait till this passes, reduce down my stock levels, and I'll come back when all this is over. I think you've got those that have embraced it kind of to the degree that they need to, and then I think we've got some customers that have said, actually, I'm going, one particularly that I'm thinking of that's gone all out on home delivery and really found a way of making it work for his business model. I know a lot of retailers say, well, I'm not sure the home delivery economics work, but he's kind of really customized around that as we've gone through this COVID period, and he's finding it's something that he's probably not going to go back from, and actually sales during these heavy restrictions are pretty close to what he would have expected had there not been restrictions. So I think, as always, it's a really diverse customer base. You've got people adopting all sorts, but what we are seeing is if they do embrace it as a big group has, and not having to do it at the same scale, then actually you can do all right and you can get pretty decent results. And actually, if you really want to go for it, as is the case with Dash, you can probably outperform that market.
I think just to add to that, James, I completely agree with your point, Nathan. And a great example of that is if you look at September, the last numbers that we put out in terms of our performance, in the September market, we outperformed the market 20% like for like, 20%. Now, we stole that market share from someone.
Yeah.
Plays to the point that you've made, Nathan.
Yeah, no, that's exactly it.
Dash, yesterday we published an interview that I did with Mark Lavery of Cambria Automobiles. He was clearly quite upset with the way that some manufacturers have he said, been detached from reality of what's happening on the showroom floors. And he was talking in detail about the bonuses and the standards that these manufacturers are insisting on. I mean, one example he gave was a manufacturer's insisted he changes his demonstrators at a time when he can't even give test drives. I mean, I thought that was absolutely crazy. I'm interested to know what you have seen from the manufacturers and whether you've had any similar experiences.
Well, I actually watched that interview, James, last night, and Mark's a very good friend of mine, so I was quite interested to see what he was saying. And I'll be honest, I didn't recognise that personally, but to be fair, Mark has different brands that we don't have. So there are 37 brands in the UK. We have 18, so we don't have half of the brands. And it's interesting, he's got a different portfolio and mix of brands. So from our perspective, I heard that comment that about the demonstrator registrations. I mean, that's poor in my view. I must admit, we haven't experienced that. I've got to say, all of our brands have been fantastic, to be fair, absolutely fantastic, very supportive. They've guaranteed bonuses, guaranteed targets. They've used common sense, which doesn't always happen, but they've used common sense in things like standards. We have experienced one or two all through last year where you kind of think, really, but then, we've gone and have a conversation. Does this really make sense? And to be fair to their credit, they have then come back and sort of changed that. So we haven't experienced. I am aware, because clearly I saw Mark's interview yesterday, and I also speak to a number of other people in the industry who have brands that we don't, and I am aware that there are some things that I necessarily wouldn't agree with, or I think is morally right necessarily. An interesting one, for example, right now, I can tell you that we are not meeting any of our showroom standards right now. I'm probably going to get a massive fine now tomorrow from all of our manufacturers, but we took a decision for health and safety reasons to remove vehicles out of our showrooms, for safety reasons, to create space. And it's been a fantastic thing that we've done, because suddenly you look at how much space we've got. It's remarkable how much of a safe environment you can create with no cars in the showroom. But actually, not one of our manufacturers has criticised us, because technically you are supposed to have the right number of cars in the showroom. And not one of those have contacted us. I mean, if one of those manufacturers contacted and said, "Do you realise you're not complying with your showroom standards?" I would be incredibly, incredibly disappointed with that. But as I said, from my experience, I think they've all been pretty good, to be fair.
And Mark was saying how difficult it's been to deal with businesses hit by outbreaks of COVID. Have you struggled a little bit with those sorts of outbreaks? I know you mentioned at the top of this that you have already lost some days. And do the manufacturers understand that sort of pressure that's happening out there in the real world?
I think yes. The answer to that, have we experienced that? Yes, we have. I mean, there's one dealership which I won't name, but one of our premium brands where they've had 31 colleagues sadly have to isolate. So we've had another one with about 21. They were the two that really stick out to me. I think generally, because if you're a manufacturer, you don't necessarily know. So if you're a manufacturer and you've got a network of 130 retailers, it's not possible for you to know every single thing that's going on in every retailer. It's not possible. I think in situations like in our case where we had 31 in one dealership goes, I mean the dealership can't function. I mean we have had cases where certain departments have completely had to be locked down and shut. I was listening to Mark's comments. Mark's absolutely right. It's very, very difficult to then address the customer issues that go around that, the resourcing issues that go around that. But you have to manage that. Where we've had two specific issues, the one with the 31 and the one with the 21, we actually spoke to the brand and we said, look, this is what's going on. And actually, they were very supportive, those two particular brands. So again, I think it's easy to be quick to criticize manufacturers, and at times manufacturers do some things that you sort of question. Our approach is always have the dialogue, and in the two cases where we've been severely impacted, and I mean severely impacted on the two, they've listened to us and they have helped.
And is lockdown having an impact on your March order bank, Dash?
Yeah, I mean, of course it is, because if you think about last year, we had a really strong January. You remember the market data was very strong. The consumer confidence data in January and February was really, really strong. We came out of Boris winning that landslide election. I think most people were frustrated around the situation with Brexit. It's not a topic I like to get involved. I don't talk political, it's not my place to do that. But from my perspective, I think there was a huge degree of frustration that the country had, because you're either a Brexiteer or you're a Remainer, But I think whether you were either side, if you're a Brexiteer and you got Boris, you're happy because you know which way it's going to go. If you're a Remainer, you were at least, well, okay, democracy has happened and we move forward and we'll be exiting the EU. At least we've got 4.5 years worth of that overhang and shadow on our sector out the way, which has been damaging for far too long, and it's been very divisive in the country. So I think there was that bounce. We had a great January, great February, and we went into, we would have had, I can tell you now, we would have had an absolutely record by some margin Q1. We were flying, so that was disappointing. So clearly we don't have the same run rate that we had in January and February because we've got lockdown. So in answer to your question, James, it's not rocket science to work at that. All order bank's going to be nowhere near as strong as it was this time last year, which is understandable.
Nathan, let's touch on used cars and used car pricing, something that's dominated our headlines certainly over the last year. What are you seeing at the moment towards the end of January we are now? What's happening with used car pricing out there in the market?
Yeah, certainly from a retail perspective, it's been one of the defining characteristics of the year and one of the biggest drivers of the strong performance that many dealerships have kind of had over the past few months. And we're continuing to see that that is carrying on. So I think up till December, the used car prices on a like-for-like basis were up 8%, which isn't really like any number that we've ever seen before. So driven by a combination of really strong demand, but also some very acute supply side challenges that only really flushed through the system towards the end of last year, and we might well see again. I think as we come into January, it's a tiny bit softer than that, but it's still 7% up year on year. So prices look like they're holding. When we look at the pricing behaviour of retailers, it looks as though most retailers, I think rightly, are kind of just pausing and holding their mettle, selling the cars that they're doing at the moment, but waiting for that day as restrictions start to release and we can see the demand come through. I know there has been some talk, I know speaking to some retailers about, potential price adjustments in March or in April. I think we don't see a lot of data to suggest that's going to be the case. Now, sometimes trade markets and retail markets can diverge and give opportunity or the opposite to retailers, but we still continue to see pretty strong underlying demand. We don't see floods of supply coming in. You've got lots of lease companies that have extended leases, so it's not like they're all going to pile into the market. Dash has just talked about new cars and the part exchanges that then come in on those. So I think we're still reasonably confident that pricing should hold up, and indeed is holding up based on what we're seeing at the moment.
I know anecdotally from friends that I've got who've got leases at the moment, quite a few of them have extended them for another 6 months because they're not quite sure what's going to happen. I wonder whether things like that are going to lead to a bounce in the market when we do start getting back to normal. I'd be interested to know what both of you think really on that front. Nathan, perhaps you could tell us whether you think there is going to be a bounce after this lockdown.
Well, I mean, the used car market, there's two elements that can bounce, isn't there? There's a volume side of it and there's the price side of it. And they're obviously both related. I think there is strong demand. If you look at consumers' attitudes, their views on affordability, I still can't go on holidays. I'm probably not going to be able to go on holidays. So I can buy a car, I can renovate the kitchen, do the bathrooms. I think you are going to, Dash, I think on an interview I watched last year, talked about revenge buying. I suspect you are going to see people wanting to find some moments of enjoyment in their life in the midst of the conditions that we're in. And, you know, a new car, whenever we've looked at the research, is a really positive experience for people. And I mean that a new used car or a new car. So, and I said at the start, I think the demand is there. So I do think you'll see the characteristics of strong demand. If there is a bit more supply that comes into the market, which I'm not sure, I'd be interested in Dash's view, I'm not sure I see that in the short term, then I think you'll probably sell the volume and maybe the prices won't creep up or be quite so strong. I think if you do get more volume, that will sell the cars at good margin, maybe not abnormally good margin. But I've heard the same as you, a lot of stories of, you know, some of that money people have, well, why don't I just buy out the PCP? That has been higher for a number of the finance providers. So you could be some of those elements, and they would push supply back a bit, which is probably no bad thing, because if that supply comes through into a market where we're less restricted, then actually those sales and margins should be able to hold up. But I'd love to know what Dash thinks.
Yeah, Dash, we're gonna see a bounce after this lockdown.
Yeah, I agree with everything that Nathan said, to be honest with you. So there's not a huge amount to add other than what it says. I think the dynamic, I think you will see a bounce. There's a lot of cash, as we know, that consumers have saved. I mean, I read an article a week and a half ago saying that savings now across the UK is 77 billion. 77 billion. Of course, 76 of that is in Nathan's personal bank account. But, as CEO of Auto Trader, I mean, it's totally understandable.
If I knew.
But I think I'm trying to keep this positive, James. You did set the tempo at the beginning.
You did a very good job.
So I think apart from Nathan's 76 billion, consumers do have 77 billion saved up. So, you will see some sort of bounce, I suspect, because I agree with Nathan. People can't go on holidays, etc. It's interesting where I live, the number of houses that have got skips and are having work done to the houses is amazing, So I think you could see some bounce. I also agree with Nathan, though. Will we see the sort of margin bounce because of supply? I don't think we will. And the main reason that I think will influence that is because the factories were shut last year. The factories are not shut this time round. And that's the difference, because, last year, factories were shut 2.5 months. Well, what do? You then got all of the people that should have changed in that last week of March, April and May coming in because of the volume that wasn't done. But of course, they couldn't get a car because the supply was, the factories were shut. That is not the case this time. So I do not see a situation where margin is going to be bouncing in the same sort of way. But I do think we will expect to see a bounce in volume, that's for sure.
Dash, are you still on the hunt for acquisitions?
Nah.
I don't believe you.
You always ask me that. Of course. Of course, we're consolidated. That's our strategy, isn't it? So, we're always looking at acquisitions. So,
and in this climate, you're still able to make those decisions and invest.
Yeah, of course. We've got, last announcement we put out in December said that we had 30 million of cash. So, we have 120 million of revolving credit facility. We've got no pension deficit. We've got no debts. Why wouldn't we want to grow? Do we fundamentally believe in the model? I'd say actually what last year's done is given us even more conviction that we have a model, and our business has been able to evolve very quickly, as we talked about earlier, to be able to evolve for the consumer behaviours that we're seeing. So we're feeling pretty confident about things, quite frankly. So yes, we do want to invest and we do want to grow, and we are looking at acquisitions. Yeah.
And if we chat again in 12 months' time, how will your business look different at that point to it does today?
How will it look different? I mean, we will certainly be, the current size that we are, and I'd like to think we'll be bigger, but I'm not going to put a sort of number on that because, the time I'm just about to click into my 14th year as CEO, James, and over that time, we've grown from 300 million to, I guess, an annualized run rate of 2.7 billion. So, and we bought businesses. We bought Leeds Volvo for £74,000, and we bought Ridgeway for an enterprise value of 130 million. But whenever we do acquisitions, we do it where it makes strategic sense for the business and for our shareholders, and when it makes financial sense. Otherwise, we don't do it. But we have a very, very strong balance sheet, as I've just said. We've got the ability to do something big if we wanted to, but there's not many big opportunities out there. But also, doing big opportunities comes with risk. Do we want to bet the farm doing something that it's not about vanity? It's not a vanity project to just go and grow big. It's about doing things properly. And we've built a very good business here. And I'm conscious we've got 4,000 people that rely on the board and myself and the management team to make the right decisions for the long term, and that's what we'll do.
Nathan, you've really helped out dealers in the last year by cutting prices and bills when they needed it. And I know from feedback that I've had from our readers that they really appreciated it. Going forward, as the industry is further hit, what reassurance can you give them that you'll continue to help them out?
Yeah, I mean, I think it's obviously a difficult question to answer, as Dash would appreciate as a PLC. But I think what I would say is we have shown pretty boldly and decisively, and now on a repeated basis, how we see our role in the partnership with retailers and the level of support that we're going to provide. The one thing I would say is that every one of these lockdowns, for a whole range of reasons, has been completely different, and there's been a level of there's been a degree to which we've not really known how it will play out. November was very different to April and May, and the situation that we're in now has been different to both of those as well. So we do try and wrap our support, trying to balance both our own business interests, because these aren't free decisions by any means. I mean, you're talking about over £100 million. So we've got to take these decisions seriously and in a balanced way that's in the right interests of our customers and our shareholders as well. I'd say I'm pretty pleased at the moment. We weren't sure whether this stay-at-home message might be down at the April-May levels. We have been surprised at the level of sales that retailers have been able to achieve. So we don't know at the moment. We're planning to be free in February, so we don't really need to think about it much further than that. But beyond that period, I'm reasonably optimistic, actually, that we should be, if we look at levels that we're achieving now, and they've got to surely get better as they have in every other lockdown as we get through February and into March, that our retailers and hopefully our own business will be able to be in a much stronger position, which we've all had impacts during this year together.
Dash, did the support the Auto Trader offer make a difference to your company, and have all suppliers come to the table and helped you out when you needed it?
Yeah, I think the first thing to say is, look, Auto Trader, and Nathan, I'll call it as I call it because I'm not going to change, but Auto Trader has been criticised over many, many years for their approach to their partners, or their retailers. I've got to give credit where credit is due for the actions that you've taken, Nathan. I mean, Auto Trader are definitely, I would say the culture that Auto Trader has under your leadership is very different. So I want to thank you for that on behalf of the industry. It's not my place to thank you on behalf of the industry, certainly from my business. And I know a lot of people have commented to me. So that's, and it's gratefully appreciated because, our businesses are highly operationally geared. And there's only so much you can do, to be able to mitigate the cost base that you have. You start switching 10 or 15% of volumes, you got a real problem. You're into losses. So, when you look at the investments that we make, and in terms of with Auto Trader, to be able to have that support is gratefully appreciated. And I want to say a big thank you for that, Nathan. So, and I know a lot of people will be feeling the same way about that. So it's gratefully appreciated. But from our perspective, our typical retail business, the way I describe how how challenging the model is you turn over 100 million typically, or use that as an example, you typically make between 10 and 12% gross profit. But typically, so if you're a well-run business, you'll be nearer 12. If you're not a well-run business, you'll be nearer the 10, possibly even lower than 10 in some cases I've seen. But your expenses are typically 10%. So it's very straightforward. If you make 11% gross profit and 10% expenses, you make 1%. It's as simple as that. And go and look at your own numbers. If anyone's listening, that's what it always works out to. Trust me. What I would then say is, if you think about 100 million turnover business, you're going to have 90 million pounds worth of costs. Now, the biggest chunk of that 90 million of costs, half of that will be people. That's where your costs come. So if we hadn't had the furlough scheme, we'd have had a real problem. Lots of businesses would have been making mass redundancies. Now, we've been fortunate. We've not had to be in a position where we've done huge sort of 10, 15, 20% redundancies, as we've seen elsewhere, because we're a strong business. We've been able to carry and protect our people, which is important. But when you've got that level of cost base, it's you've got to look at everything, and clearly marketing is probably marketing would be our third biggest cost base after people and then demonstrators.
Nathan, that must be nice to hear after the year you've probably dealt with. Finally, chaps, I'd just like to end on your single most important piece of advice for the year ahead, and perhaps Nathan, you could kick us off.
Well, the year ahead, unfortunately, is still going to have elements of COVID restrictions and those sorts of and the conditions that we've dealt with over the last year and we're dealing with right now. So I think the advice I'd provide both for this year and actually probably for the years ahead is, do not assume it's going back to normal. You need to embrace the things like click and collect, home delivery, providing, really putting thought into providing a safe environment for your customers. And if you do, whether you're restricted or not restricted, I think you can do better. And as Dash has said, people like Dash do operate. They've got a very disciplined operating model. They invest heavily in these things, embrace change when it comes. And as a result, they do take market share. And I think whilst everyone can't take market share, the reality is a lot of people aren't going to change. And there's a real opportunity for any business. And that doesn't matter whether you've got 5 cars, 15 cars, or thousands of cars like Dash. I do think if you embrace the situation we're in, work hard to provide the best experience for your people and for customers that you can, there is opportunity to still, keep your head above water. And when the market returns, you will only capitalize on any bounce that we see. And it'll be great for you this year. And as I said, I don't think people are going to go back. I think a lot of these, surely we won't be in restrictions, hopefully next year. But I think consumers' attitudes, car buyers' attitudes, and people like Dash's attitudes to how they run their business is going to shift permanently. And that's who people are competing with.
Thank you, Nathan. Thank you for that. Dash, what would your advice be to dealers watching this on how to capitalise in 2021?
Yeah, I agree with Nathan's comments. I think the two things I would add to that is brilliant basics. Brilliant basics. We are obsessed at the moment in our business around inquiry management, and I mean obsessed. Literally drilling down, where are they coming from? Follow through. We are all over inquiry management. So brilliant basics. And we all know what these things are. Love your customers to death. Follow them through. Manage every inquiry. So just run your business like every single penny depended on it. And then the second thing I would say is around mindset. And I've said this to you before, James, but I'm a big believer, and I often get accused of being too positive, but I am a positive person. I'm not going to change, certainly not at 50, that's for sure. I think it is difficult. It's a difficult environment that we're operating in. This is a definitely different lockdown, as you've said a number of times, James, and it is tougher. There's no doubt about that, because the number of people who are now being affected in the numbers. But also, let's have that positive mindset. There is that light at the end of the tunnel. 7.8 million people vaccinated. The new announcement last night of the latest vaccine, which specifically will help us for the UK strain. And the UK government's already, subject to approval, ordered 60 million doses. So I think we are leading the way in terms of the Western world in terms of vaccinations, and God willing, we'll get through this very quickly, and we'll get back to some sort of normality. And I think the other thing, just in terms of that positive mindset as well, think about your well-being as well, and your mental well-being as well. And I just want to add this, because one of the things I did stupidly in Q4 is I put a lot of weight on. because I was sat in this office from pretty much 7 a.m. till stupid hours in the early hours of the morning, and doing things like this. But what I started to do, and I got on the scales on Boxing Day, and I'm embarrassed to admit I was 13 stone 6, which is the heaviest I've been in my life by some way. I've lost over a stone in fact, 1 stone 3 pounds just by doing walks. So I would encourage people just to get out. You are allowed to go and do exercise. Go and find that time to do it, because you'll feel a lot better. I certainly do. So that's my one last thing I'd say as well.
Yeah, thank you, Dash. And congratulations on losing that weight. I know it makes a big difference getting out there and doing some exercise. And I'd just like to add, if people are feeling the pain this time round and feeling the depression of the lockdown, there are people out there who can help. Contact Ben, contact the Mind charity for support, talk to others in the trade. There's lots of people out there can lend a friendly ear, so you're not alone. Make sure you reach out. But thank you to both of you. I really appreciate your time today. It's been fascinating to hear your insight at the start of this year, and I'm sure we'll speak again as the year goes on. But best of luck with the rest of the lockdown.
Thanks a lot, James. Thanks, Dash.
Great stuff. So really good to hear from Dash and Nathan there. If you'd like more Car Dealer Lives like this one, you can log on to cardealermagazine.co.uk and click on the live tab at the top of the page. If you'd like to be involved in Car Dealer Lives like this, drop me an email. I'm james@blackbullmedia.co.uk. Thanks ever so much for joining us. I'll see you next time. Goodbye.